Hello, my name is Rock Daniels, and I've been a realtor and real estate investor for 2 decades and a general contractor for over 15 years. As we all begin to think about taxes at this time of year, I wanted to go over a very important subject that affects many real estate investors: 1031 exchanges. What are they, and how to utilize it for tax deferral? When it comes to real estate investing, many individuals are looking for ways to minimize their tax liability and maximize their returns. One option has proven to be a valuable tool for many investors is the 1031 exchange. But what exactly is a 1031 exchange, and how can it be used to defer taxes on the sale of investment property? Well, a 1031 exchange, also known as a tax-deferred exchange, is a method of exchanging one investment property for another while deferring the payment of taxes on the sale of the property that was originally sold. This allows the investor to defer paying taxes on the sale of the original property until they sell the replacement property. The key to a successful 1031 exchange is the timing and structure of the transaction. To qualify for a 1031 exchange, the investor must identify a replacement property within 45 days of the sale of the original property and close on the purchase of the replacement property within 180 days of the sale of the original property. Additionally, the replacement property must be of equal or greater value than the original property, and the investor must reinvest all of the proceeds from the sale of the original property into the replacement property. One of the biggest benefits of a 1031 exchange is the potential for tax savings. By deferring the payment of taxes on the sale of the original property, the investor can retain more of their capital to reinvest into the replacement property, potentially increasing their returns over the long term. As Benjamin Franklin once said, "In this world, nothing can be said to be certain except for death and taxes." And while taxes are an inevitable part of our life, it's important to remember that they don't have to be a burden. A 1031 exchange can be a valuable tool for reducing tax liability, but it's important to keep in mind that it's not a one-size-fits-all solution. Every investor's situation is unique, and it's important to seek the advice of professionals like accountants or attorneys to determine if the 1031 exchange is right for you. It's also important to note that I am not an attorney nor an accountant, and I always seek advice for my clients through these professionals in their areas of expertise. However, if you do need assistance within buying or selling real estate, I'll be happy to help. So in conclusion, a 1031 exchange can be a valuable tool for real estate investors looking to defer those taxes on the sale of an investment property. By seeking the advice of a professional and structuring the transaction correctly, investors can potentially save money on taxes and increase their returns over the long term. As Will Rogers once said, "The best way to avoid paying taxes is not making any money." Now, that's not possible at all. So while this may not always be possible, a 1031 exchange can help reduce tax liability and maximize returns on real estate for investors. Thanks so much. Have a great day.